Hello, welcome to People and Profit. I'm Kate Moody. Artificial intelligence is the next frontier, but is it also the next bubble? It's a question that analysts and investors have been asking since tech giants began investing billions of dollars in artificial intelligence and reaping the early benefits. Just 7 companies have been driving stock market gains. Together, Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla account for over a third of the S&P 500 index. The so-called Magnificent Seven are all vying for supremacy in AI development and distribution. To get an idea of just how much the tech industry is spending and earning from AI, here's Kemi Knight.
As big tech keeps splurging on AI, investors are increasingly anxious to see results. Throughout the past year, Silicon Valley has ramped up its spending. Microsoft has planned to fork out $80 billion on AI infrastructure in fiscal 2025, while Meta's $72 billion spending is largely tied to AI. Although Apple and Tesla spend less overall, they're also steadily increasing AI-related investments, Tesla planning to double its AI outlay to more than $20 billion this year. Most AI spending is focused on infrastructure. Combined, Google, Amazon, Microsoft, Oracle, and Meta are expected to spend some $400 billion on data centers by 2026. Investors are now sending the message that soaring spending can be acceptable if it fuels strong growth. Microsoft's $81.3 billion revenue announcement at the end of January failed to impress them, its shares dropping 10% the following day.
The AI stocks have been priced for perfection, and investors are demanding perfection when they get their quarterly results. Microsoft is a case in point. Big earnings beat, the cloud's growing at 38%, the stock is down 58 points, just incredible. And just the beat wasn't big enough.
It's a different picture when it comes to Meta. Shares soared after it reported a 24% rise in revenue in the fourth quarter, a sign that its ad sales AI pivot is reaping benefits. The contrast highlights just how much has changed since the launch of ChatGPT that kicked off the AI boom more than 3 years ago.
Let's bring in our guest now, Professor John Danielson from the London School of Economics. Thank you for joining us on People and Profit today. First of all, let's make sure we're on the same page in terms of definitions here. What is a stock market bubble, and what are the risk factors we have to look out for?
A stock market bubble is when the prices of stocks like Amazon and Google and the likes, they rise so high and these companies become so valuable that it almost becomes inevitable that they will all crash and burn. That is, the stock price will fall significantly. Something we've seen so often in the past. So it's really a stock market AI boom means that we have the prices of these companies rising so rapidly that they have no way but to fall significantly.
When you look at the market today, do you think it meets those conditions? Are we, in your opinion, in an AI bubble?
I'm fairly certain that the market is in an AI bubble. What the market is expecting is that one of these companies will end up being a global winner. So in a way, this is a winner-takes-all situation. 1 or 2 companies might end up dominating this AI space, and those companies will become fabulously wealthy. But at the end of the day, we're always useful to think back to past episodes. In the year 2000, everyone thought that Yahoo would become the biggest company in the world. They would own internet search. All it took was 2 young men with a better idea. 2 young men that founded Google, and they took away all of Yahoo's stock market valuation and made one of the biggest companies in the world. It takes very little to dethrone one of these companies.
We will look back at those comparisons in just a minute. First, I want to ask you the multi-billion or multi-trillion dollar question even. What might happen if or when this bubble were to burst?
The real question is, if it's only stock market investors, then those investors will, of course, suffer significant losses. And this is helped by sovereign wealth fund, pension funds, and the like. But the bigger threat to society is that if it's financed by borrowing money, which is increasing the case, and especially if banks are providing the money. So what happens is, if some of these investments sour, which I think is fairly likely, And if banks end up then suffering significant losses, that in it by itself can threaten the stability of the financial system.
And what are your findings when it comes to this particular AI cycle at the moment?
Well, the indications to me are that we are at the very top of the cycle. There's a increasingly large number of companies are all betting that they will end up owning, if you will, AI. They will end up being the company at top. And what the investors seem to be pricing is that they're expecting a large number of companies to own the AI space, when I suspect there'll only be a handful, and quite likely the companies that we will see dominating AI in 10 years will be quite different than those we see today.
You alluded recently to a lot of these comparisons that we're seeing to that dot-com bubble of the late 90s. Talk us through, if you would, some of the similarities that you see to today's situation to that past bubble, or indeed other bubbles that we've seen in history.
I mean, every technology bubble we have seen over the past 150 years is similar. We saw the telegraphs, we saw electricity, we saw the internet, we saw the telephones, railroads. They all meant that a large number of investors, they piled into this technology. The benefit, of course, to society was significant because all these investors, they built infrastructure, they built railroads, and they built telegraphs and the like, which all helped us all in the long run. But by far, most of these investors, they lost everything, and only a handful ended up being winners. And I see many parallels with the AI bubble today to those past episodes.
And your work on bubbles has looked a lot at the intrinsic value of an asset behind this kind of an investment boom. What's your take on AI as a concrete investment?
I mean, AI, I think, is absolutely set to revolutionize society, and AI will become a very valuable technology going forward. The real question is who will end up, in a way, dominating or owning this AI? Will it be a handful of companies like we've seen with the internet that end up being very dominant? Or will it be a large number of smaller companies? And what we are now seeing in the AI space is that there has been a very significant slowdown in the process of AI development. It's all about AI tools now. And we are seeing new companies coming into the market, like DeepSeek and the like, that might end up threatening the dominance of the big players. And the indications are we will see more of that in the future.
Should and can policymakers be trying to rein in any of this investment?
Certainly AI is a very big concern to society, and therefore policymakers need to be concerned about what AI is doing, whether it is the labor market or my field, which is financial stability, and how AI can create crisis. But if you're looking only at the AI investment bubble, I think the best the politicians and policymakers can do is to stay out of the way and allow investors to invest. And those countries that manage to allow investors to invest, like the United States and China, have been so successful, they will end up reaping the benefits in the future.
We've talked about these so-called Magnificent Seven, the tech companies that at the moment are really monopolizing market growth and AI spending. It is worth pointing out that they are all American. What does that mean for the rest of the world?
Well, what is now already happened with the internet is that the Americans, they own the internet space. And if the Americans and the Chinese end up owning the AI space, it means that we Europeans and the rest of the world will end up paying American companies profits, which I think is very unfortunate given the economic situation in Europe. But at the end of the day, this benefits America much more than it benefits Europe. And we will see the consequence of that in the years and decades in the future.
Do you have any concerns about how AI technology is being rolled out at the moment?
There are certainly concerns on how AI is being rolled out. And my biggest concern is how the private sector is rapidly rolling out AI and spending large amounts of money, whether in developing the technology or using the technology, while this public sector is very far behind. And I've been following this space for a long time, and I've never seen as much difference between the capabilities of the public and private sector, with the public sector falling so much behind. And to me, that is a significant concern, especially in my field, which is the stability of the financial system.
Do you have bigger concerns for the way that this boom of investment could affect broader societies?
Well, the boom is certainly affecting broader society. Those investors who end up winning, they will end up becoming wealthy, so it can increase wealth inequality and destabilize society that way. And along the way, like with every technology, some people will end up being on the right side of this and others will be on the wrong side of this. And given the polarization in society, if the AI boom affects that, and it's quite possible it might, then that is a big public concern.
John, do you yourself use AI?
I use AI very extensively. You know, I don't know how I did my work before AI happened.
Can you tell us concretely how you see it as a real tool for the future?
I mean, the AI, what we are now seeing is that AI has been used to review legal contracts, and we've seen this recently where one of the big AI companies came out with technology that allows them to evaluate contracts and processes in companies, which led to very large drops in the share prices of companies providing those services. And I suspect all of us will end up being very big users of AI going forward, and those who resist or don't want to use AI might find themselves on the wrong side, at least of their careers, if not history.
John Danielson from the London School of Economics, thank you so much for joining us on People and Profit today. That's all for now. Don't forget you can catch all our shows on the France 24 website or as a podcast wherever you usually listen. Until next time, thanks for watching.